or are you in RBI? Because generally people don't take the central banking as a elective. Generally, I'm saying I would like, yeah, acha. Good, but because you'll get a lot of knowledge from central banking over here and this topic. Okay, yesterday's PDF, have you got it? I've shared the PDF yesterday. I'll share it today again. See this, there's a question bank. I'll share the question bank. Hold on. Because this question bank will be very helpful to you. One sec. First, take down this question bank because this question bank is a lot of help. Are you having it? Question bank? Having it, na? Yeah. Okay. For those who don't have it, kindly take it again. Okay. I'll be sharing this on a daily basis with all of you. One more is there, that is notes. Let me check if I'm having it because today I'll just collect the remaining things. Hold on. Central banking notes. Central banking this elements. Just give me 1 minute. I'll check this and then we'll start with today's topic. Trend. Full book notes. Yeah, this one. Let me check it because I was having two types of notes. One were from your old book and new. Second one is from your new book. Yeah, new book. Hold on. I'll give these notes also now. Mm, yeah. Take these notes. Good morning, Sheikh Imam. Now take these notes also. See this. Now I have shared two documents with you guys. One is this question bank and second is the notes in the pin comment. All of you kindly download it. Okay? Pin comments and this question bank and notes. These will be very helpful to you. Mind it, almost 70-80% questions are from these. Okay? So this and the classes follow that much. Okay? Because this question bank is a comprehensive question bank, means it contains your book chapter and questions. It contains other questions which have been digged by me from the this book. Okay, so this will be very helpful to you. Question bank as well as these notes. Go through both of them. Hardly smaller ones. You can definitely go through it in 1 week. Okay, but do go through it because this is very important. Whatever you for your exam, many recollected questions are there in this question bank. Chalo, let's start. See this. Today's topic is this supervisor as the role of supervisor. Plus, we'll be doing ombudsman. Plus, we'll be doing various other agencies also. So, RBI Act 1949, RBI Banking Regulation Act 1949 empowers the RBI to inspect and supervise commercial banks. Okay, so this supervision angle is given in BR Act. These powers are exercised through on-site inspection and off-site. Now, both these are exam questions: on-site and off-site. On-site inspection, off-site inspection. Okay. Now, what is on-site? What is off-site? We'll see that. In now this history of this inspection, Till 1993, regulatory as well as supervisory functions over the commercial banks were performed by Department of Banking Operations and Development. Now this question comes in exam. This hierarchy comes in exam. Up to 1993, it was DBOD, Department of Banking Operations and Development. DBOD, 1993. Afterwards, the things changed. The new board was formed. Subsequently, a new Department for Banking Supervision (DBS) was set up to take up the supervisory functions. So, supervisory means only pure supervision. So, this was separated later. Now, that further separated relating to commercial banks from DBOD. So, DBOD they separated DBS from this. Okay. Now, DBS was also one of the banks where I have worked. Good morning. So they separated DBS from this. Now what happened after DBS? See this. Further there was a breakup. For dedicated and integrated supervision, overall credit institutions, bank, development financial institutions, NBFCs, the Board of Financial Supervision (BFS) was set up in 1994 under the aegis of RBI. So BFS was set up in 1994. Look at this. BFS was set up in 1994 from DBS. Further breakup. For focused attention in the area of supervision over NBFCs, Department of Supervision was further bifurcated into DBS and DNBS. So Department of Banking Supervision and Department of Non-Banking Supervision. So in 1997. So this hierarchy you must remember. 1993 up to 1993, it was DBOD. After that, DBS was formed. After that, in 1994, this BFS was formed. Now look at this. 1993 to 1994, all the things happened in 1 year only. DBOD, then DBS and BFS within 1 year. Everything in 1 year. Afterwards, in 1997, these two are formed, DBS and DNBS. Okay. So Department of Banking Supervision, Department of Non-Banking Supervision. These departments now look after the supervision over the commercial and development financial institutions and non-banking finance companies respectively. Means basically DBS will look after this and DNBS will look after these two. Both these departments now function under the direction of BFS. So main head is BFS only. Okay, BFS. This is the head. Under BFS, these two guys work. These two departments work. So remember the years in this central banking, they don't have many questions to ask. They ask you such years, who was the head of this 15th commission. They always ask you. The two times this question had come. I have given it in the question bank also. Who was the chairman of 15th finance commission? They ask you every time. This time also you'll be getting the same question. Who was the head of 15th finance commission? Do you know how many of you know? Who was the head of 15th finance commission? This question was asked this time. Huh? Anyone knows? Who was the head? 15th finance commission. Okay, let me show you the question bank only. Okay. Who was the head of 15th finance commission? Who can tell me? It was Sinha. I think N.K. Sinha. I've given this in this. Okay. Finance. Let me check this. Finance. Let me show you this. All you guys definitely follow the question bank which I am sharing, because it's very important. See this question bank. See, there is a separate topic on 15th Finance Commission. This is very important. What is the maximum target set by 15th Finance Commission? Then next, this explanation is given. Which article of Indian Constitution allows to form the Finance Commission? They are very particular about 15th Finance Commission, very much. Okay, 15th Finance Commission was appointed for how much duration? Okay, then first Finance Commission, they don't ask you that much about first Finance Commission, but they ask you about this 15th. Which of the following is recommended period for 15th Finance Commission? Definite question in your exam, definite. 2021 to 26. Who was the chairman of 15th Finance Commission? This is what I was talking of. Every time they'll ask you this question. Chairman. Who was the chairman of 15th Finance Commission? Singh, Sinha. I thought Sinha, it was Singh. N.K. Singh. Okay? N.K. Singh was the chairman of 15th Finance Commission. Remember, this time they might ask you this chairman or the other questions. What is the target range set by 15th Finance Commission for a fiscal deficit? 3.45 to 4.45. You'll see these questions, remember, in exam. Okay? This 15th Finance Commission projected the GDP of, they are very, very particular about this 15th Finance Commission because this is in existence right now. Up to 2026, the recommendations will go on. Okay? So projected debt to GDP ratio of 8.7 to 8.7%. This was a projected GDP ratio for this after peaking it at 89.6. So these questions you will definitely get it. Okay. Many questions are there in this. Many questions. Kindly go through this question bank and you will see the same questions in the exam. Okay. Without fail, go through it. There are almost, I'll tell you, 700 questions roughly from various other things, various elements I have taken. See, these are some of these questions are from your book. Check your progress. Last ones. Then earlier ones I have taken it down from myself. Say this. If you go through it, earlier, this is all from your book. Last one. Then earlier one I have taken it from my own. This is what I've gone through all the books, okay, through all the complete book, and then I've come means got these questions, okay, these ones. Then there are further earlier ones also. This question is asked many times. Which bank is known as the old lady of Threadneedle Street? This question is asked many. There are two questions which are asked. One is Old Lady of Threadneedle Street, that is Bank of England. And second question is, in which country the central bank is powerful than the government? Do you know? In which country the central bank is powerful than the government? In Bharat, what happens? Our government is more powerful than the RBI. Obviously, in every country it should be. But there is one country and one developed country in which the central bank is more powerful than the government. Do you know it? Which is the country? Anyone? No, 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 no. Germany. Germany, the central bank is more powerful than the this government, and that bank's name is Bundesbank. I've given this. In this also, I'm having. Look at this, Bundesbank, because that's why I'm saying. Follow this question bank. See this Bundesbank. Which bank's clear is not under this? Not this one. Threadneedle, not this one. Bundesbank established Germany. This Second World War, not this one. There's one question. It is more. It might be in Germany. Grmany. Issuance Germany. Many questions are there. Look at this and go through this. Without fail, go through this. Okay? Inflationary. You'll see this question. So study more about this and go through this question bank without fail. Bundesbank. Bundesbank is the answer. Germany. Chalo. Let's move on today's topic. So this BFS was formed. Now both the departments now function under BFS. Financial institutions, primary dealers have been brought under the ambit of regulation and supervision of BFS. So all these private parties also have been brought under this BFS now. Primary dealers, institutions. We'll study about these primary dealers later. The BFS constituted an audit subcommittee in January 1995 with the vice chairman uh, of the board as its chairman and two non-official members of BFS as members. So audit committee was formed. The subcommittee's main focus is upgradation of quality statutory audit. Okay, that's a basic job. So remember, 1994 BFS, 1995 ASC Audit Subcommittee. Okay, these years are specifically marked over here. Now, what is on-site and off-site inspection? On-site means going there directly. On-site inspection of the banks is carried out on an annual basis. Besides head office and controlling offices, certain specified branches are covered under the inspection. So, whenever RBI does the audit, RBI does the audit of head office, controlling office. Controlling means what? Regional office, zonal office, and also some branches where there are heavy loans, big loans. Okay. So all these three are covered under so as to ensure minimum coverage of advances. Annual Financial Inspection AFI focuses on statutory mandated areas of solvency, liquidity, operational health of the bank. So this annual audit, which is done in the banks, head office, zonal office, or the branches, it contains what? It contains this means what is the focus of that? Solvency, liquidity, and operational health. Means what? How do I find out the solvency liquidity? It is found out through camel. This camel question will be there in the exam. Everyone, it will be there. Camel. What is camel? Two questions are always there. One is camel and second is CALC. I'll give you that also. Camel. Camel means capital adequacy, asset quality, management, earning, liquidity. Means liquidity and system control. This is one. It's actually camels S. So S is system and control. Okay. So again remember, they ask you what do you mean by M in in camels, or what do you mean by E in camels? What do you mean by L? What do you mean by S? They'll ask you anything. Okay. So capital adequacy, asset quality, management, earning, liquidity, and systems and control. Okay. Next. Offsite inspection. Now this offsite means what? Not going to the branches. Look at this figure. On-site is done yearly basis. Yearly. January 23, January 24. In between what? RBI's visit will be in these 2 months. Generally year to year they do it. But in between what? For this in between, this offsite was takes care of. As a part of new supervisory strategy, a focused offsite surveillance was initiated in 1995. The primary objective of this offsite surveillance is to monitor the financial health of the bank between two on-site inspections. Right? Between these two on-site inspections, if something happens to the bank, who will check it? Or will we check it only after 1 year? No. So that's why we have brought this offsite. Identifying banks which show financial deterioration and would be the source of supervisory concern. So this in between period that is covered by this offsite. This acts as a trigger for timely remedial action. Then corporate governance. Now this is pillar 3 of Basel. Corporate governance, or we call it market discipline in pillar 3, right? Same things here. Three words are all similar. Transparency, corporate governance, Then what is that? Transparency, corporate governance, these two, yeah, for stakeholders. So these words are always parallel to each other. Okay. What do you mean by corporate governance? It means that whatever happens in the bank, in any bank, should be known to the stakeholders. Suppose if there is a fraud in the bank, it should be known to the stakeholders. Who are the stakeholders? Stakeholders mean those who are interested in the bank. Who is interested in the bank? Top management is interested, auditors are invested, investors are invested. So all of these guys, there are many others, not only three, there are many. Okay. Even the employees are interested, lower employees. Obviously, everyone will be interested in what is happening to my bank. Got it? So this stakeholders mean those who all are interested in any institution. Those are called as stakeholders. So corporate governance, introduction of concurrent audit system, constitution of independent audit committee of board, appointment of RBI nominees on boards of the banks, creation of a post of compliance officer. Some are such are some steps. So these steps will lead to this proper transparency, appointment of RBI nominee, compliance officer. Again, these words are very important. So let me mark these words. Hold on. RBI's nominee, RBI nominee. This is independent audit committee. This is very important. Independent. Okay. Concurrent audit system. So concurrent audit has been brought by RBI for this corporate governance part. Okay. Next. Besides, RBI monitors the implementation of recommendations of Jilani committee. Remember, Jilani committee. It's given in the next slide, relating to the internal controls in the banks on an ongoing basis due to during the annual financial inspection. So Jilani committee has given major recommendations. Okay, what is that? Now this is Jilani committee, a time-bound action program for rectification to be drawn up and closely monitored. This was given by Jilani committee. Fraudulent transactions to be reported to vigilance chief of inspection. Then smaller, medium-sized branches to rectify irregularities pointed out during the inspection within 4 months. So Jilani committee's recommendations were these. Okay, rectification to be drawn up and closely monitored. Action program. Okay, fraudulent transactions to be reported on to the committees. Then small and medium branches to rectify. These are the recommendations of Jilani committee. Now, what are the initiatives? RBI has taken several other supervisory policy initiatives. These include quarterly monitoring visits to the banks displaying financial and systemic weaknesses. Mean those which are weak banks, they are done quarterly review. Appointment of monitoring officers and direct monitoring of certain problems areas in housekeeping, etc. Now, what do you mean by housekeeping? Firstly, understand quarterly is for those banks which show weaknesses. Second, housekeeping means doesn't mean generally we tend to see housekeeping means cleanliness. No, it means ratios. Whether the ratios are in order or not. That is basically housekeeping. In addition, the department provides secretarial support to the Board of Financial Supervision and acts as the executive arm. Okay. So it will act as a secretarial support. Secretarial means all document related support. Core principles. Now, core principles of what? Of what are we talking of? We are talking of this transparency, okay, corporate governance. Against the backdrop of the banking sector reforms in India and a global focus on internal control and supervisory mechanism, the need for building a strong and efficient banking system comparable to the international standards cannot be gainsaid. Means we need a strong banking system. Simple. Okay, basically we need create world class financial system in India. That's what the basic purpose is. On the basis of recommendations made by an in-house group, the monitoring of financial institutions first started after 1990. This was done through prescribed quarterly returns on liabilities, assets, sources, deployment of funds. So quarterly returns on this. The BR Act 1949 empowers RBI to inspect and supervise commercial banks. On-site, off-site, this is done. Yeah. The division in the department at present supervises, regulates 10 select all India financial institutions. That is IDBI, ICICI, IFCI. IFCI now, it's a arm. IIBI, Exim Bank, NABARD, NHB, CDB, IDFC and TFCI. Now these are all supervised by this board. Okay. Now these names will not be asked. Huh? Which board? BFS. Huh? BFS supervises all these bodies. Now names they don't ask you that much. This name won't be asked because this is not related directly to your banking. It's mainly related to financial institutions, and generally the questions asked are related to the banking. With a view of having continuous monitoring and supervision of these FIs, an offsite surveillance has been put in place. Okay. Further, the division collects from LIC, GIC, and UTI information relating to assets and liabilities, flow of funds. So it collects information from these three institutions also, LIC, GIC, and UTI, for the purpose of overall assessment of the impact of operations of FIs on the total flow of resources in the economy and for compiling new liquidity and monetary aggregates. Now, this whole thing you are not required to remember. Only remember the names LIC, GIC, and UTI. Okay. Nowadays, this UTI is gone that much. Means, in fact, it is there. Still, it is there. UTI was earlier a separate body. Now it has come up as a commercial. Then we'll go to integrated ombudsman scheme. This question not only single, there will be many questions on this integrated ombudsman scheme. So RBI Integrated Ombudsman Scheme 2021 was launched in a virtual mode by Honorable Prime Minister. So 2021, this is important. 2021. It combines what? This integrated ombudsman combines three existing ombudsmans. Which were those? Banking Ombudsman 2006, NBFC Ombudsman 2018, and Digital Transaction Ombudsman 2019. So remember the names: Banking 2006, NBFC 2018, and Digital 2019. These were the three ombudsmen separate. Now these have been combined into one. That's called as Integrated Ombudsman (IO). Okay, remember these names: Banking, NBFC, and the years. Banking was in 2006, NBFC 2018, and digital was in 2019. Now these all three have been gone. Now it is IO complete. Okay. In order to ensure speedy resolution of customer grievances against the REs. Now what is RE? Again this question is asked. What is RE? I have shown this. I'll show you. All the bodies which are governed by this ombudsman are called as REs. All the bodies. I'll discuss. RBI brought about RBI Integrated Ombudsman Scheme in 2021. The responsibility of representing the regulated entity and furnishing information in respect of the complaints filed by the customers against the RE, regulated entity, would be that of the principal nodal officer in the rank of general manager in the public sector bank or equivalent. Now this is very important. Means what? Understand the overall concept over here. Sure, integrated ombudsman scheme is there. It doesn't mean banks should not look into it. Everything should be looked in by this integrated ombudsman only. Okay, it's not that. This is like this. Whenever any person complains, okay, any person has a query or complaint against any bank, first it needs to be resolved by the internal bank. okay, by the bank itself. If it is not resolved by the bank, then it will go to this IO. Okay. So first it needs to be resolved by the internal ombudsman of the bank. So every bank should have their own internal ombudsman. First, very important. Every bank. It means SBI will have their own internal ombudsman, PNB will have separate, HDFC Bank will have separate, everyone will have their own ombudsman. If the customer faces any complaint, he or she will first complain to the internal ombudsman of the bank. Within 30 days, this bank and the ombudsman have to revert back. If they don't revert back, then after 30 days, this will go to this iOS. Means customer can escalate it to iOS. Any customer aggrieved by the act or omission of RE. Omission means what? Negligence. Okay? In deficiency of service. See this. Ombudsman is only related to service. You can't file a complaint against ombudsman saying that, see, my loan is not disbursed by this bank. The bank is not sanctioning the loan. Okay? So you can't this file a complaint against this on this area. Okay? One second. Yeah. So you can't file a complaint again on this part. Okay? So this principal nodal officer, complaints filed by the by the customers to this RE should be first handled by this internal ombudsman of the rank of principal nodal officer in means in the name and in the rank of general manager or above in public sector, minimum general manager. Now, what is RE? RE means regulated entities. All scheduled commercial banks, RRBs, local area banks, primary urban cooperative banks, state and central cooperative banks, any other entity which has been licensed under section 22 of the BR Act. Remember, section 22, it gives the license to all these things, commercial banks, RRBs, all the banking licenses. Section 22 are referred to as banks. Now these are the part of REs, but these are not the only part of REs. I'll give you more. The executive director in charge of commercial education and protection department of RBI would be the appellate authority under the scheme. Means what? If the ombudsman doesn't give the this jurisdiction correctly, okay, in that case what do we do? Suppose the ombudsman does a partiality. Ombudsman, which ombudsman? Integrated ombudsman. Here, if the bank's internal ombudsman does a partiality, then the customer will go to this integrated ombudsman. If the integrated ombudsman does the partiality, then what? In that case, the consumer education and protection department in charge, executive director, that will be the final authority. If this person also does some this fraud or partiality, then what? After this, I can go to the courts. Okay, means High Court, Supreme Court, everywhere. But after this, got it? Further REs, see this. Earlier we saw the banks, now others. All India financial institutions, NBFCs, miscellaneous NBFCs. Look at the names of NBFCs. So many NBFCs are there. Firstly, NBFC. Second is MNS NBFC, means miscellaneous. Third one is R, residuary NBFC. All payment system providers, system participants, prepaid payment instrument issuers, all authorized persons, including those who are the agents of money transfer scheme, service scheme. So MTSS means basically all of them who are dealing in financial world will be treated as a RE, regulated entity. Why this scheme is needed? Ombudsman scheme. With greater connect to the formal banking system with the masses under the financial inclusion scheme and increased digitalization of financial system, it is necessary to institutionalize progressively, effectively grievance redressal mechanism to infuse greater confidence among the users. So important part is greater confidence. Why do we need the scheme? for so that people have confidence in the system. Because that is what is needed. See here, if people tomorrow lose confidence in the banking system, whole of your RBI, whole of your banking system, whole of your economy goes for a toss. Okay. With the increase in customer base, robust systems have to be developed for development of efficient financial system. Right? Robust system means strong. What is the process? Internal ombudsman is already institutionalized in REs. So internal means their own ombudsman. With majority of the grievances are resolved at the entity level, normally REs do not allow the escalation. So banks try to resolve it within 30 days only at their level. But if it is not resolved in 30 days, then the customer can go to iOS. Only those that are not satisfyingly closed by the REs get escalated to the IO. So basically, only those which are not satisfied. So any customer aggrieved by the act or commission of the RE in deficiency of service can file a complaint. So deficiency of service means it's called as omission. Second word to this is omission. Such customer should initially lodge the complaint to the RE, and if the complainant is not satisfied with the decision or the complaint has been remained unresponded for 30 days, then it can be escalated to iOS. So for 30 days you have to wait. First file a complaint with the local bank, whichever bank you have faced the problem. This bank should respond to you in 30 days and to your satisfaction. If they don't, then go to iOS. Amount limitation. RBI iOS will consider the complaints of the customers of REs without any limit. So without any limit, remember this. Earlier there was a limit on ombudsman, 10 lakh, 20 lakh, now nothing. But it should relate to deficiency in service, omission. There is no cutoff for the amount. Ombudsman can pass an award for any direct perceived loss threat suffered by the complainant. So, the various losses, this awards can be passed. What are those? We are having the question on this. There are separate questions on this ombudsman's award. A compensation up to 20 lakhs, in addition up to rupee 1 lakh on the loss of complainant's time. See this. This question will be asked in the exam. Be sure about it. This award by the ombudsman. So ombudsman can give a award up to 20 lakhs plus 1 lakh for the time and the pressure, okay, faced by that complainant. But remember, this is the award. Complaint can go up to any amount. If I have a loss of 1 crore, I can file a complaint. But the ombudsman can give the award. Award means basically the jurisdiction or judgment, order. So he can give up to 20 lakhs. Okay. So 20 lakhs and 1 lakh for the complainant's time. You will surely get this question in exam. Expenses incurred, harassment, everything. All this is in 1 lakh. So all your harassment, expenses, time is in 1 lakh. Okay. Suffered by the complainant can be awarded. Deficiency in service means what? Shortcoming on the inadequacy of any financial service or such other service. So basically shortcoming. What do you mean by shortcoming? It is written in my bank that DD will be given in 2 hours, but I don't give it for 1 day. And then because of that, the customer suffers the loss. So that is basically deficiency. If I tell you that I'll be doing this RTGS in 1 hour or 2 hours, if I write it in my bank, that RTGS will be done in 2 hours and I don't do it for 1 day, deficiency. Okay. All these where the customer suffers the loss. But the important part is the customer should suffer a loss also in this. Not only financial, mental also. See this mental anguish. Okay. In the tectonic shift, RBI brought in CICs under the ambit of RBI. CIC means what? All that CIBIL, Highmark, TransUnion, all these companies have been brought under RBIOS. Earlier they were not there. Okay, what is the use of this? Because of this CICs, CIBIL has been brought under this ombudsman. What used to happen? CIBIL used to downgrade the scores of the customers without their knowledge. Downgrade. okay, without their knowledge. So every customer should have a right to know why the score of any customer is downgraded or upgraded, both of them. Okay, so CICs have been brought within the ambit of RBI iOS, much to the relief of large number of small and big borrowers. Right. So many of even you and me. Suppose if you come to know your score has become 600, you should know from where this 600 has come. Okay. At a time, CICs will also be made to establish their own internal ombudsman framework like other REs. The proposed move shall provide immense relief to millions who experience downgrades without understanding the reasons, right? What are the functions of CICs? What do the CICs do? Means this CIBIL company, CIBIL or this high mark. Okay, what do they do? The CIC collects and analyzes credit and loan related data about the individuals and companies and generates its products and services on the basis of this data. So collects loan related. Okay. Now, which is the new thing which is coming up against this CICs now? Do you know? There is a concept called as new concept has come in the banking system. What is that? Now, the CICs have become the history now. Now, the new concept is account aggregator. You might have heard about this word now. Account aggregator. Account aggregator. So, this is the future now, and this is the past. CIC is the past. CIC collects only from the loans. Account aggregator collects from various things loans, mutual fund, your MF investments, insurance, your electricity bills, means all your consumer bills, all these things, your spending, consumer bills. Okay, it covers through your CASA account, current account, saving account. It catches that also. So, account aggregator is a it many things. It goes on and on and on. Your income tax returns. So account aggregator covers you in 360-degree view, whereas CIC will cover only the loans. So now that's why this CIC is going out and account aggregator is coming in. Okay. So all the basically right now you will study more about CIC and less about AA. But this is the future. The data is provided by CICs to the members, REs and other financials based on the data of the individual. The CIC prepares a credit information report, arrives at a credit score. Based on the data of the company, CIC prepares the company credit report. So basically, it prepares the reports. One is related to the individual, that is credit information report, and for the companies, it is company credit report. Remember the two names separately. For individual, it is CIC, okay, credit information report, CIR. One sec, yeah. See this credit information report for the individual customers and for the companies it is CCR, company credit report. Okay. The most popular CICs are CIBIL, Equifax, Experian, CRIF Highmark. So this is CRIF Highmark full name. We just call it Highmark now. I think SBI uses Highmark. So CIBIL, Equifax, Experian and CRIF Highmark. These are the four popular CICs. By including CICs, large number of customer grievances have been monitored. So that's okay. Conscious about the acute shortage and retrieval of information to be arrived at updated database credit rating. So basically, large number of grievances will be handled. The intending borrower has to approach individual CIC for correction of records. They may or may not be responsive. Now the customer's grievances can be handled by the RBI under this ombudsman scanner. So if I get let's say I get a score which is lesser than my expectation, what should I do? I'll first go to the CIC. How does it work? Everyone kindly pay attention. How does the CIC system work? Suppose if I've got a score of let's say 500 and I say no, 500 is wrong. So I should apply to this company, whichever company. It can be any of these four: Civil, Equifax, then Experian, and that last one, Highmark. I can apply from where I've got the score. That see, give me the reason for this. So they'll give me the report and also the transaction and the bank name, because of whom this score has come down. So I'll go to that individual bank. Understand this. I can go to this individual bank and everything can be done online now. You need not go physically to any bank or any CIC. You can go online to this individual bank, okay, and then ask them why this score has been reduced and what is the default in this. You have a right to know this, okay. So this is the process. Got it? Now Basel, this Prudential Basel 3 rating, this already you have studied it in your BFM, but then also the important parts over here. See here, if you have a cash with you as a collateral, now here we are talking of collaterals and loans. If I am having cash with me, then the risk is 0%. Remember these three at least. Cash is 0%, corporate loans is 100%, and riskier assets greater than 100%. Cash 0, corporate loans 100%, riskier assets greater than 100%. Prudential policy framework for BR and banking regulation and supervision. So prudential means the RBI guidelines. Always remember, whenever you get this word prudential, it means we are talking of RBI. Okay. The basic rationale for exercising fairly close regulation and supervision of banking institutions all over the world is premised on the fact that banks are special for several reasons. Special means tomorrow if the banking system collapses, the whole economy goes down. That's why they are special. The bank accepts uncollateralized public deposits as a part of payment and settlement system and enjoy the safety net of deposit insurance, right? We all take the deposit from the customer and then we have this insurance, DICGC insurance, okay? As functions of RBI evolved over the years, the focus of of its role as the regulator and supervisor of the banking system has shifted gradually from micro regulation to macro regulation. So RBI is now shifted from micro to macro. Okay, earlier RBI was focusing on micro, means all. Do you know before 1990s, RBI used to give the rate. Why on 1990s? Yeah, 1995 up to. RBI used to give the rates of FDs. Rate of FD was given by RBI. So now what has happened is RBI doesn't have time for all these things. It says you decide on your own. Okay. So this journey from micro to macro is a huge landmark, major landmarks in the evolution of RBI role vis-a-vis the commercial banks provided the interesting insights. Okay. So this is basically, yeah. Prudential policy framework. Further part, on supervisory side, RBI has traversed vast territory in progressively refining the supervisory focus to ensure safe and sound banking system. So these all things we have already studied some part, that the boards which were formed. Okay, RBI followed in 19 this on-site annual appraisal of the banks by RBI followed in 1970s. So on-site this RBI inspection on-site going to the branches was started in 1970s. To the system annual financial review during 1980s. So annual financial review means per year visit was started in 1980s. Then on the annual financial inspection standalone banks during 1990s. So this offsite inspection was started over there. Okay. So RBI shifted from on-site to off-site. Yeah, this was what I was talking of. Camels and cacks. Both these questions are asked. CALC, I told it is CASC actually. Camels and cacks. These two questions will be asked to you. The offsite monitoring of the banking system was also introduced in 1995 as a part of supervision of the ongoing supervision of the banks. So offsite means in between the two on-site inspection there should be a off-site inspection. The supervisory rating models, basically camels and CAIIBs, based on the crucial prudential parameters. So what are these camels? We have already studied: capital adequacy, asset quality, management, earnings, liquidity, and sensitivity. Sensitivity means basically we have studied this separately. Then CAIIBs is what? Capital adequacy, asset quality, compliance, and systems. This CAIIBs question or camels question, both will be asked to you. Camels and CAIIBs, both of them. Okay. So capital adequacy, asset quality, management, earnings, liquidity, and sensitivity. Capital adequacy, asset quality, compliance, and systems. Okay. These assets are adjusted based on the risk, with riskier assets requiring higher weightage. Cash is requiring 0, corporate loans 100, loan to highly volatile commercial real estate and loans that are 90 days past due are having risk weight higher than 100%. So 90 days past due means which have already become NPA. Those loans which have become NPA, this rating will go higher. Obviously, we have that supervisory rating, right? What are those ratings? Substandard and all these. What are this provisions? Substandard. Then what is that? Doubtful 1, D1. Then doubtful 2, right? This is for 2 years, and last one is loss. So substandard, it is what? I'll just give it in short. 1525. This is secured. This is unsecured, right? Unsecured, secured and unsecured. Substandard is what? 1525. Here doubtful 1, it is 25 and 100. This is 40 and 100. And this is 100 and 100. These are the provisions. Okay. These are the provisions for this. And for standard assets, it is 0.25, 0.25, 0.75, 1 and 0.4. Right? 0.25 for whom? Agri, MSME, and housing loan. Housing. Okay. This 0.7 is 5 is for what? CRE RH, commercial real estate. RH, commercial real estate with residential housing. 1 is for only CRE, commercial real estate, which do not have housing. And 0.4 is for all other loans. This is for standard. And this is for NPA. Standard. And this is for NPA. Okay. This provisioning, these are the provisioning norms. Everyone should remember this. Okay. Provisioning norms, very important. Remember, it's a central banking class going on. Central banking. Those who are having the elective of central banking should stay over here. What are the various formulae? See this NIM. NIM means basically, yesterday also I gave you NII upon average earning assets. NII upon average earning assets. Okay. So average earning assets means you should not include NPA in this. NII upon average earning assets. So it should be greater than 4.5%. Cost to income ratio. So operating expense excludes provision losses. So operating expense upon net interest income plus non-interest income. So this is basically interest plus non-interest. Both of them included. So it should be less than or equal to 70%. ROA, return on assets. See, this is basically ROA only. Net interest income, this can be called as ROA. Say this. This together combined is known as ROA. Together. Okay, this part, only this part. This is known as ROA. So ROA can be calculated as net interest income upon average growth rate. So interest plus non-interest, both of them are included in ROA. In NII, we include only interest, non-interest. So remember, the difference between ROA and NIM is only one. In NIM we have NII or NIM, both of them. NII or NIM. NIM and they are, NIM is what? NII divided by, just now we saw this, NII upon assets. Okay. So in these, we only consider interest incomes. Interest income. Income. Okay. But in these, ROA, understand the difference. In ROA, we consider interest plus non-interest, both. Means non-interest means your TPP, insurance, mutual fund, whatever you sell. That is considered in ROA, not in NII. Okay. Return on equity means net interest income upon shareholders' equity. Okay. Growth rate means whatever is the capital. Policy framework for supervisory framework supervision means basically we are talking of PCA. PCA means what? Those banks which come under this CRAR. CRAR, if it goes down, so these banks have been brought under PCA. If your CRAR goes below 9%, 9%, you will be brought under this PCA action. The prompt corrective action framework was put in place to enable timely intervention in case of incipient stress in the banks. Okay. So mainly remember, less than 9%, less than 9% CRAR. Okay. This is brought under PCA. So they call it safe banking. Safe banking. What is safe banking? Safe banking means these banks where the CRAR is less than 9%. These banks cannot purchase private companies' bonds or debentures. They can only purchase government companies' debentures, bonds. Okay, government debentures. So that is called a safe banking. Any bank which is under PCA has to purchase the bonds related to government only, because you can't enter into the riskier instruments. Okay, that is PCA. Then CRILC. CRILC is for large loans. Basically, Central Repository of Information for large credits, large loans. So, banks should report credit information including classification on account of special mention account on all the borrowers of aggregate exposure of 5 crores and above to CRILC. So, all loans, let me check the latest figure. Hold on. Hold on. Yeah, it is 5 crores only. Yeah. So CRILC will have all the loans, 22, latest one only now. Yeah. So CRILC will have the all the loans above 5 crores. Okay. And above, with them to CRILC maintained by RBI. So this is the repository for all the banks, common banks, common repository for all the banks. Okay, that is under CRILC. Hold on. Okay. So CRILC will basically, it will cover all the loans above 5 crores. Now one more. Bank authorization policy. Now this question will be there in the exam. Again, even the CRILC will be there, PCA will be there. All these questions you will see it in the exam. As against the earlier system where the banks approach RBI for piecemeal throughout the year for branch authorization. Means what? Sir, I have to open one branch. Give us the license. I have to open one branch in this area, that area. All these per branch, this authorization was taken from RBI. Now RBI has shifted this focus. The revised system provides for holistic and streamlined approach for the purpose by granting bank-wise annual aggregated authorization in consultation and interaction with each applicant bank. Here, annual aggregated authorization means what? RBI will give you the license to open 20 branches in XYZ area. Now you open it anywhere in that area only. Suppose if it gives you the license to open 20 branches in rural Maharashtra. So you have to see the rural Maharashtra or rural Tamil Nadu or rural Rajasthan. You have to see the rural areas of those states and then open the branches over there anywhere. There's no limitation that this village only, that village only. Rural, they want it. Means if they have given the license for rural. Okay. So this is known as annual aggregated authorization. You need not go to RBI every time. Sir, one license, one license. No. RBI doesn't have time nowadays for all these things. Okay. One sec. Let me take last paper. Okay. Say this. This was a paper of your December 23. Everyone pay attention. This was the paper for December 23. Okay. So it was this. One question from Canadian Central Bank. Two from Federal Bank. Federal Reserve. Federal Bank means Federal Reserve. Few from Bank of England. Bank of England means this question. All the questions I have given it in the question bank. Canadian Central Bank is also there. Federal Reserve we call it. It's not Federal Bank, Federal Reserve. Okay. Camel acronym. Look at this. Camel acronym. I've just now given you. Lots of question on Basel norms. Basel norms means already BFM what you have studied. Go through it again. Repo rate. Okay. Basics. We'll be covering this repo rate again. Okay. MPC member count and who all. MPC means what? MPC committee. We are having this topic. Okay. Even in the question banks it's given. Okay. MPC committee. Okay. Then it was, yeah. One second. What am I showing you? Let me show you the question bank paper. Okay. Question paper. Look at this question paper. Question paper. Yeah. This one. So MPC member count and who all. Who all are there in that MPC? This was asked. Case study on primary dealer NBFC. Case study on primary. This is given in the question bank also related to NBFCs. Many questions are there. Same will be asked. Dual mandate of Federal Reserve. What is the dual mandate of Federal Reserve or even RBI? It's the same. Dual mandate means controlling the inflation and looking at the growth. Both of them. Layers of NBFC. This is chapter number 16, 17. Last two chapters, 3 chapters are related to this. Starting from October 22, RBI introduces new classification system in the layers, base, middle, upper and top. So these layers, this was asked. What are the 4 layers of NBFCs? Base, middle, upper and top. These are the 4 layers of NBFCs. Okay. What is WCRA? I'll give you that. We are having this. LAF corridor, liquidity adjustment facility. Okay, LAF corridor. Basel norms. This was asked. Incentive transaction cost. This. Camels again question. European Commission questions. European Commission they are. Here I have given the questions in the question bank also related to European Commission. Monetary policy total members. Okay. Monetary policy committee. This MPC. MPC means what? MPC is a committee. This just now what we saw MPC over here. This MPC means what? Every 2 months RBI has that monetary policy, right? Before that policy, there is a committee which gives the guidance to this policy. Means it's not that they just come and sit there and give the press conference. This monetary policy. There's a homework done by the MPC, Monetary Policy Committee. So who all are the members of this? I have given this in the question bank also. So monetary policy total members 3 plus 3 6. How many members are there? Okay. Chairman of the 15th Finance Commission, that N.K. Singh. December monetary policy repo rate increased by now. This December they might not ask you this time because no rate has been increased latestly. Out of the 6 members, how many supported December monetary policy? Now this was for that time, December. Now they won't be asking you this time because this has gone long back. किस कंट्री के रिजर्व बैंक की पॉलिसी उसके फिस्कल पॉलिसी से ज्यादा बड़ी होती है? नाउ यू टेल मी, which country's RBI Reserve Bank is stronger than the government or fiscal policy? RBI gives monetary policy and this government gives fiscal policy. So which country's monetary policy is stronger than the fiscal policy? Who can give me the answer now? Correct now. Correct? Germany. So this question will be asked again this time also. Okay? Primary dealer minimum capital means how much is the minimum capital for primary dealer? It is 150 crores, 150 CR. Okay? 2008 की क्राइसिस के बाद कौन सी बॉडी बनी थी? 2008 crisis. Which body was formed? Basel III was formed after this 2008 crisis. Basel III came after 2008 because of that Lehman Brothers crisis. Lehman Brothers. Okay. Primary dealer, MPC, Monetary Policy Committee supervision. So these were the questions asked. Now I have given some explanations also over here. MPC committee is responsible for fixing the benchmark interest rate in India. This MPC Monetary Policy Committee. The meetings of the MPC are held at least 4 times a year. 4 times, at least 4 times. Okay, it can be more than that. Specifically, at least once a quarter, and it publishes its decisions after such meeting. The committee has 6 members. See this MPC committee, 6 members. 3 officials of RBI and 3 external members nominated by government. So 3 from RBI, 3 from others. They need to observe a silent period 7 days before and after the rate decision for utmost confidentiality. Very important. See, this 7 days silent period will be asked to you in exam. What is silent period? The committee members who give some recommendation 7 days before this and 7 days after this, after that committee, after the press conference of RBI for this monetary policy. What is the silent period? They will not speak to anyone. They will not purchase any shares or bonds. Otherwise, what will they do? When they know that such and such thing we have given the recommendation, so they know the share market will go up or go down. So what will they do? They'll take the positions accordingly. So that is called a silent period. You can't do anything over there. Okay. The governor of RBI is the chairperson of ex officio of the committee. So governor of RBI is the chairperson. Okay. Decisions are taken by majority with the governor having the casting vote in case of tie. So casting vote is with the governor of RBI. Okay. The current mandate of the committee is to maintain 4% annual inflation up to 2026. Okay, 4% of the annual inflation with an upper tolerance of 6 and lower tolerance of 2. So 4 plus or minus 2 it is. Okay. This MPC committee, they will definitely ask you these questions. RBI Act 1934 was amended by the Finance Act 2016 to constitute MPC. So MPC was formed because of what? This Finance Act 2016. Okay. Finance Act 2016. They ask you this question. MPC was formed because of what? 2016 Finance Act. Okay. Which will bring more transparency and accountability. Now this is okay. The committee is answerable to Government of India if the inflation exceeds the range prescribed for the three consecutive quarters. Important question again. Means exceeds means what? Inflation they have given the target of 4%. 4 plus 2 or minus 2. So 6 or 2. But if it exceeds the range, means if it goes beyond 6 for 3 quarters, this MPC is answerable to the government. Okay? Answerable. Remember this. Let me see if anything is important over here. September 23 meeting MPC. RBI Monetary Policy Committee has kept a key policy rate unchanged at 6.5%. Even today it is the same. The fourth meeting on the trot, let me see if anything is important over here. Because after that also meetings have happened. No, this is of no use to you now. Because afterwards also meetings have happened. Only the important part over here is the real GDP growth projection for FY24 has remained unchanged at 6.5%. So RBI, this MPC committee has given the growth GDP growth for FY24, means this present, it's 6.5%. Inflation for FY24 is projected at 5.4, so it is within the range 6%. Okay. Then preventing food and fuel price shocks are negotiable necessities. The governor said RBI may have to consider OMO with regards to G6 to manage liquidity. So OMO means what? Open market operations. In this, RBI purchases and sells the bonds. Whenever RBI purchases the bonds under repo, it will give the money to the banks. Whenever RBI will sell the bonds under reverse repo, it will get money from the banks. Okay. So RBI does this OMO. OMO will be done via auction. Okay. Chalo, we'll stop over here. Okay. Tomorrow again, same time. Chalo, bye everyone. Follow the question bank and the book notes which I have given. Follow them religiously and without fail. I'll be daily asking you some questions from this question bank. Daily I'll ask you. Okay. Chalo, bye everyone.